let me hit you with a fact that should be f***ing illegal, but isn't. Because the system has the moral backbone of wet cardboard. Insurance companies sometimes care more about your credit score than your driving record. No, seriously, you can be a perfect driver and still get charged more. Because your credit score had a panic attack in 2019. Insurance is basically saying, we see you didn't pay your Target card on time. Cool, that means you definitely crash cars. Welcome to Money CSI, where we investigate crimes against your wallet. Because the system always leaves fingerprints. Here's the crime. Insurance companies assign you a secret rating called a credit-based insurance score, and it can raise your premium more than an actual accident. Yes, a real crash, less important than forgetting a bill one damn time. Fingerprint number 1, insurance thinks bad credit equals bad driver, even though there is absolutely no science behind it. This isn't logic. This is simply corporating. You know what I mean. Your insurance rate is influenced by your debt, your credit utilization, your payment history, how long you've had credit, your mix of credit, how many accounts you have, how fast you pay them, even random, like retail cards. What does any of this have to do with your ability to operate a vehicle? Nothing. Like, literally nothing. It's like saying, you ate a Hot Pocket twice this week? That could only mean one thing. You're a menace to society. Fingerprint number 2, credit scoring has nothing to do with risk. Everything to do with profit. Let's access the evidence locker because this is where the bodies are buried. Evidence 005A, credit matters more than crashes. A driver with bad credit and a clean record often pays more than a driver with good credit and a DUI. Just let that sink in. Insurance thinks a late Comcast bill is riskier than drunk driving. Evidence 500B, premium differences are insane. Drivers with poor credit can pay 70% to 120% more, even if they have 0 accidents. That's not a rate. That's a robbery wearing capris. Moving on to evidence 005C. This system is fully legal. 38 states allow it. Only a handful ban it. California, Hawaii, Massachusetts, Michigan. If I called your name, please give yourself a hand for not f***ing your residence over based on your credit. We appreciate it. But real talk, your credit score isn't just ruining your loan approval. It's ruining your car insurance rate too. Evidence 005D. Credit score isn't a risk tool, it's a filter. It filters low-income households, young adults, people hit by medical debt, people recovering from layoffs, people living paycheck to paycheck. This isn't a risk assessment, it's class-based pricing. Evidence 005E. You're being profiled. Insurance models literally categorize you as financially risky, high churn likelihood, payment inconsistency, low lifetime value. These labels have nothing to do with driving and everything to do with how profitable you are as a product. You're literally a walking barcode and they've already decided your worth. Insurance claims they use credit because people with good credit file fewer claims. Cool. I guess you also determined that people with bad credit cause earthquakes and summon hordes of murder hornets. This isn't reality. This is statistical gymnastics. Here's the real reason. Credit scoring lets them charge you more without raising rates for everyone else, legally. It's targeted inflation, financial sniping, a premium assassination attempt. It's like they're cleaning the money they make from overcharging you with the credit system. You Fingerprint number 3. Credit score is the loophole they use to secretly raise prices. Case file A, the $900 credit hit. Driver with perfect driving record and a 610 credit score, and quoted $1,920 for 6 months. Friend with a speeding ticket plus a minor accident has a 760 credit score. His price? $1,100. Same car, same city, worse driver, better credit. Let's move on to case file B, the medical debt trap. Women's credit score tanked from hospital bills. No accidents, no claims, no tickets. Insurance raised her premium by $87 per month because she lost her job and couldn't pay a medical bill fast enough. She didn't get worse at driving, she got worse at being exploited. Case file C, the perfect driver who pays more. A man with 15 years accident-free pays more than a college kid with 2 dings and a parking lot hit and run because the kid has good credit. Fingerprint number 4. Credit scoring punishes stability and poverty, not danger. Let me tell you the part that'll make your soul leave your body. Insurance companies don't even use your real credit score. They use a modified version called the insurance score, which they calculate using random credit factors, probability modeling, risk tiers, secret scoring algorithms, and projected behavior. You don't even get to see your own rating. You're being judged by a score you cannot access based on logic that does not even exist. Fingerprint number 5. You weren't denied a fair rate. You were denied transparency. Your insurance has nothing to do with your accidents, your driving, your safety, or your skill, or your record. It has everything to do with a flawed number in a flawed system designed by flawed people in a flawed industry, hoping that you never ask questions. For them, that's flawless victory. The victim of this case file isn't your credit score. It's you, your wallet, and your trust. Want to escape credit penalty? Download the Money CSI Credit Survival Guide in the description. Or don't. And keep letting a 3-digit number decide if your ass is safe behind the wheel. Money CSI, because the system always leaves fingerprints.